Hello, my people. I hope that you are well. Welcome to another episode of the Accounting Officer. Colleagues, as we usually do on our episodes, we start by acknowledging your feedback. I wish to extend, colleagues, my thanks to you for the feedback that we have been receiving as the channel, the comments that we have been receiving, especially the messages that we have been receiving. Some of them, as I said, are asking that we cover certain topics in the future. Some of them are just encouraging messages that wish that the channel could still go on. I do wish to make this promise, colleagues, that we will cover the topics, number one, that you are suggesting, and we will try and keep the channel going for as long as it can. I mean, the public sector legislation is broad and we can cover every aspect of it, colleagues. So for those who are new to this channel and for those who are currently not following us on social media, on Facebook and Instagram, please kindly follow Accounting Officer. And then on YouTube, the handle is the Accounting Officer. That's the page name, or the @ part is Accounting Officer SA. On TikTok, it's Accounting Officer SA. You will see I probably have the same profile photo across my social media accounts, but you will see most of them will be having my videos from episode 1 going forward. So just a bit of recap from the last episode, colleagues. We touched on terms of mass destruction. These are the terms that we said bring some element of uncomfortability in the public sector when they are mentioned. We are talking about unauthorized expenditure, irregular expenditure, fruitless and wasteful expenditure. Colleagues, as I said, I do acknowledge your feedback. I have received some direct messages around fruitless and wasteful expenditure that the colleagues wish to see more examples being made around them. I do promise you, colleagues, that I will start posting shorter videos on TikTok to explain these terms. I will definitely start with the fruitless and wasteful expenditure. Last week, we also spoke about the important people in the room around the PFMA, MFMA, and other public sector legislation. These would be your executive authority, your accounting authority, and your accounting officers. As these episodes start to build up, you will start seeing the relevance of these people and also the relevance of the terms of mass destruction. So tonight I have a very exciting topic, the topic of supply chain. We will make an introduction to the topic of supply chain tonight, and I plan to cover this topic for the next, I think, 3 episodes or so. You will start seeing what type of areas that we are covering on supply chain. This would include the methods of procurement. That would be your petty cash, quotations, competitive bidding. We'll also speak about a controversial topic of deviations in the public sector procurement. This will be coming up in the next few episodes, colleagues. As I said last week, that we will try and invest more time on supply chain. So tonight we'll only be covering the introduction to supply chain. We will touch on the establishment of a supply chain unit, and we might also touch on some procurement thresholds, those ones that are like the guidance that we received from Treasury around procurement thresholds, which basically covers the procurement methods, as I mentioned, which is your petty cash purchases, written down quotations, and competitive bidding. So supply chain is a highly regulated area, colleagues, and for us to understand supply chain, we have to understand the public sector regulations or the public sector legislation as a whole. So the public sector legislation stems from the Constitution of South Africa. The Constitution of South Africa is known as the primary legislation in the Republic. And then most legislation that come up in the Republic, whether it's your secondary legislation like your PFMA and MFMA, and then other legislation that comes as tertiary legislation, or as supporting legislation to the secondary legislation, they all stem from the Constitution of South Africa. We will make an example of this. As I said, tonight we are touching on procurement in the public sector, and we will also touch mostly Treasury regulations, which would restrict us to departments, constitutional institutions, and 3A and 3C public entities. So, as I said, every piece of legislation in the public sector stems from the Constitution. So, if we are talking about legislation around procurement in the public sector, we need to read Section 217 of the Constitution, which states that when an organ of state in the national, provincial, or local sphere of government, or any other institution identified in the national legislation, contracts for goods and services, it must do so in accordance with a system which is fair, equitable, transparent, competitive, and cost effective. So these characteristics or attributes that I just mentioned, you will see more of them in the public sector when it comes to procurement, that procurement needs to be fair, equitable, transparent, competitive, and cost effective. So fairness would be speaking about some sort of procurement, or let me not say some sort, would be speaking about procurement which is just impartial and just. Basically, there is no favoritism. It's a fair process for everyone. When it's equitable, equitable is merely expanding on the term fairness, but equitable also addresses previous inequalities. You'll start hearing about terms like historically disadvantaged individuals. Those would be your people of African descent, so your Black South Africans, without touching any race before we get accused of a race law in this context. But it will also touch on other historically disadvantaged individuals, such as your women, whether black, white, any type of race, and also people with disabilities. We were all historically disadvantaged. It will also speak about transparency. Transparency is clear. Everything has to be on the table. We all have to know that this process started here and it ended there. So when it's competitive, it means that we are using the same bar to measure everyone. So there is no specific measure for other people. We are all measured the same as the bidders or the people who submitted quotation. It will also speak about cost effectiveness. Cost effectiveness merely says we are paying the lowest price possible for the type of goods that we are procuring. So that's the Constitution element of it. The Constitution starts feeding into the PFMA, colleagues. So the PFMA on Section 38 and on Section 51 speaks about the procurement. These sections are general responsibilities of accounting officers and accounting authorities. So Section 38 would be speaking to accounting officers, which is accounting officers for departments, accounting officers for constitutional institutions, and for trading entities. And then Section 51 will be speaking to public entities, accounting authorities in this case. These are the terms that we covered on the previous episode. If you are still confused between accounting officer and accounting authority, I suggest you go and watch the previous episode that we had, which is episode 2. So basically, these sections speak about procurement in the PFMA. They say that the accounting officer or the accounting authority, in the case of public entities, must ensure that there is an appropriate procurement provisioning system which is fair, equitable, transparent, competitive, and cost-effective. These two sections are now connecting to the Section 2171 of the Constitution that we read, speaking about procurement. So, procurement in the public sector, especially in the PFMA, is well documented on the Treasury regulations, and as I said, that Treasury regulations are applicable to departments, constitutional institutions, Schedule 3A and 3C public entities. So let's jump in on these Treasury regulations. So Regulation 16A just echoes what is said on the PFMA, that there should be an effective and efficient supply chain management system, which deals with the acquisition of goods and services for the department or organ of state, or even the disposal of state assets or letting of state assets, including disposal of goods and services, or sorry, not services, just goods that are no longer required in the public sector. So just to expand on acquisition, acquisition is just purchasing, and then if we are letting, it means that we are renting out our halls, we are using our assets. Like for instance, Transnet has certain buildings that they are no longer using in Johannesburg, that they are letting out to other departments. I think also the Department of Public Works also lets out some of the state assets. That's what we mean. Letting out is basically generating revenue, such as rentals. So the regulation 16A also speaks about establishment of an SCM unit within the public sector. So it states that the accounting officer or authority must establish a separate supply chain unit within the office of the institution's chief financial officer to implement the institution's supply chain management system. So this means that like each institution to which these regulations apply, it has to have a separate supply chain unit. We can't say, no, it's under expenditure. No, supply chain unit is part of the CEO's office. No, it's supposed to be in the CFO's office, but as a separate unit within the CFO's office. People would ask why the CFO's office. I think in the Treasury regulations, again, if we read them, there is parts where it's speaking about the CFO, and you would find that the CFO is more responsible about compliance in the public sector when it comes to financial management. So also supply chain is about purchasing, and it's about basically expenditure and also generating revenues when we are renting out the units of that institution. So once we have established the supply chain unit, we need to start recruiting the people with the necessary skills for supply chain. And once those people are here, we have to make sure that they are regularly trained, because let's face it, there's a lot of updates around the supply chain management. For instance, the preferential procurement framework, it was just amended not so long ago. It's no longer the same one that was there from 2017. There's a different one. It was amended. So there are regular updates on legislation around supply chain. Also, there are updates on SCM issues. You remember in COVID, Treasury put out certain prices that you can only pay up to this much if you are purchasing masks or sanitizers for your department. So there's usually those kind of regulations that are in place that come up, that seem to spring up every now and then. There's also element of transversal contracts or transversal purchases, that if the department can't procure this, it's already procured under Treasury. You need to go through the Treasury process. So there's always updates that are coming out from Treasury relating to supply chain. So that's why the supply chain officials should be trained every now and then. So basically, supply chain is the procurement of goods and services. So it's either by way of quotations or through a bidding process. You will see that there are quotations where we don't need to have written down quotations, but there are quotations that are strict, that we need to have written down quotations, and these must be within the values as determined by the National Treasury. So we will talk about these values. These are threshold values. The threshold values are provided by Treasury, and they basically help us split between quotations and competitive bidding processes. We will talk more on competitive bidding processes, colleagues, on the next episode. We will have an entire episode that speaks about competitive bidding process. We will touch tonight briefly on quotations processes. So this instruction note that I'm referring to, for those who like to read, it's instruction note 2 of 2021-22. Just go on the Treasury website, go under legislation, PFMA, office of the procurement officer, and then you will start seeing instruction notes, Treasury guidelines. Just click on instruction notes. You will find this instruction note that we will be discussing tonight. So the thresholds values that we are speaking about on this instruction note would be basically values between in fact, purchases up to 2,000 Rand are purchases that can be purchased with the petty cash in a certain institution. So petty cash, it's just small purchases. It could be your stationery, it could be your coffee and sugar. It's just everyday consumables that you could be purchasing. In fact, let me not only limit it to everyday consumables. Let me just say it's just any purchase that is up to the value of 2,000 Rand, including any applicable taxes, colleagues. You can't say it's 2,000 plus VAT. No, it's 2,000 Rand, including any taxes, including any VAT, anything that is applicable. The total there in the bottom line should be 2,000 Rand. So it also, this instruction note also mentions that the accounting officer, it gives the power to the accounting officer or the accounting authority to determine their own internal procedures, how they would ensure sound financial management of funds in this procurement method. So the instruction note won't give you an explicit guidance on this. This has to be at the discretion of that institution, and it has to be documented on their SCM policy. Well, the instruction note is also not restrictive. It allows the accounting officer or the accounting authority to choose not to procure on this method, but to use the written down quotations for anything. Well, it would be up to the value of R1,000,000. We will cover it on the next aspect. So they can choose not to use the petty cash purchases, because petty cash purchases, sometimes you don't need written down quotations. You can get verbal quotations to make those purchases. So the accounting officer or authority may choose not to follow this approach, but to rather follow the written down quotations approach. The instruction note allows, but this must be incorporated in the SCM policy of that department or that trading entity or that public entity. And it must, if we're choosing the quotations, the written down quotations approach, it must follow the processes of the written down quotations approach. So speaking about the written down quotations approach, the written quotations approach is saying any procurement up to the value of R1,000,000, including any applicable taxes. So the bottom line value when we make a purchase, it has to be up to the value of R1,000,000. We should be getting written price quotations from prospective suppliers. So, and this instruction note is also strict to say that you must invite written price quotations from prospective suppliers who are registered on the CSD. That's the Central Supplier Database. There are many reasons why they want suppliers who are registered on the CSD. It could be reasons of tax compliance, because the CSD also has procedures to ensure that people are complying with tax. It's also suppliers registered in the CSD we would easily see that no, this supplier is not prohibited from contracting in the public sector, because there are people who are tasked to supply certain things, and then they don't supply those things, and then Treasury has a right to prohibit them from ever participating on procurement in the public sector. So it's always safer to procure from the CSD, so to get those three quotations. But the regulation is clear. If it's not possible to get those written down price quotations from suppliers in the CSD, except where suppliers are exempted from registration on the CSD, suppliers who are exempted from registering in the CSD, it could be your cooperative, community cooperative projects. So if there's a case where we are unable to get quotations from suppliers in the CSD, the instruction note is clear that the accounting officer should document the reasons, and these reasons should be approved. In fact, it's not the accounting officer now, it's the SCM unit documenting the reasons why we couldn't get three quotations from the CSD, and these should be reviewed and approved by the accounting officer or the accounting authority, or the accounting officer can actually delegate maybe to someone or to a certain committee within the institution to be the one that approves those reasons. This is for audit trail colleagues, so that they avoid getting a non-compliance finding from internal audit or from their external audit, the Auditor General of South Africa. So it also states that accounting officers and accounting authorities must ensure that the prices are market related, and where they are not, they should negotiate, and those negotiations should be in line with their SCM policies or prescripts issued by Treasury. As I said, one of the characteristics of a sound procurement process is to have a cost-effective procurement system. So we should always try to find the lowest price possible. So the rule of thumb, it could be how much the item is sold in the market. So any process, colleagues, it needs to have controls that will ensure fairness in it. Any process in SCM, it needs to have those controls, as we have spoken about the written down price quotations, and also ensuring that we select from the CSD, and if we can't select from the CSD, we have to document those reasons. There are other controls that we need to align with on our procurement for written down price quotations. Apologies, colleagues, I will start reading these ones from screen. The accounting officer, accounting authorities must, in their SCM policies, so this needs to be incorporated in the SCM policy, must prescribe the processes to be followed for the invitation of price quotations, including but not limited to the following. So when we say in the legislation, including but not limited to, we simply say this element or this part, it's the minimum that we need to see in the SCM policy. And if you breach any of these ones, you are likely to have a non-compliance finding from your internal audit or from your Auditor General. So it says that the SCM should prescribe a process around the persons or a committee responsible for drafting specifications. What does this mean? So it doesn't have to be a certain individuals, like a certain committee, but it could sort of explain the attributes of people that would be in that committee. For instance, this process is not as strict as the competitive bidding process that we will be dealing with. But in this case, it simply means that you know that if you are if you are wanting quotations for something, you need a head or someone who is delegated from the user department. Let's say you are procuring for IT items. So we will definitely need someone who's coming from the IT department, who will help us with technical jargons of the specifications that are being drafted. We might also need someone who's representing finance. Maybe it could be the budget officer to say, okay, no, we still have budget for this contract. We might need someone from demand management in SCM to say, no, this was part of our SCM plan for the current year. This is what we need to do. We might need different people from different departments, colleagues. But you will see when we're talking about the competitive bids, you will start seeing those committees there. It would be established committees. So in the SCM policy, we must be able to prescribe a process to be followed for the invitation of price quotations around these people or committee that will be responsible for drafting specifications. So specifications is what we want to achieve. If we are aiming to have a procurement of laptops, for instance, in the IT department, what type of laptops are we procuring? How much of a RAM are we looking at for those laptops? How much space do we need? How much of a processor do we need in those laptops? So that's what it simply means. It should also prescribe the methodology for selection of suppliers from the central database, central supplier database for invitation to quote. So, for instance, if we are, as I said, we are procuring for IT equipment, we can't be selecting a supplier from the category of catering to also submit a quotation. It doesn't make sense, colleagues. So this methodology should be documented down that for IT contracts or for certain contracts relating to a certain service, we should look for suppliers that specialize in that type of service. So it should also prescribe the period of days for which the price quotations will be invited. So we will advertise this thing maybe in our local newspaper. We should know how many days that advert will stay there to invite people to submit quotations. Or perhaps if we write to suppliers to submit quotations without making the advert out there, we should also know that we are giving suppliers this amount of days for them to, apologies colleagues, to submit their written down price quotations. So it should also stipulate the validity period of price quotations after the closing date. You might find that some suppliers are saying that this quotation is valid for 30 days after the closing date or after we submit or as from the date that this quotation is generated. We must also have controls around that so that we do not find ourselves purchasing laptops at a higher price now because that quotation period has lapsed. Our procurement process and our invitation should be clear that this is the amount of days that we will need to go through the quotations. And at this day, we will start saying, we will make our appointment or we will select our successful supplier. So we expect that the quotation that you submitted, it should remain the same. It must not change now. You must not come back to us and say, oh no, our prices went up last week. We need to increase the quotation that we submitted after you have been selected. So it's important for the SCM policy to sort of mention that validity period of price quotations. It should also stipulate the method of inviting and receiving price quotations, including documentation. So how are we going to receive these price quotations? As I said, it could be adverts. It could also be just selection from the central supplier database, or it could be both. But this SCM policy should stipulate how we're going to get written down price quotations. and also the documentation that we are expecting. So if we are expecting a conflict of interest, quotations, financial statements, tax status, in the case of a municipality, people would also be expecting a municipal clearance certificate of the supplier to ensure that this supplier is paying their municipal bills. So it's everything, colleagues, that would be expected. So those documentation that will be expected, they need to be documented down. There are primary documentation in the public sector which have to be there, like as I said, your declaration of interests. If, for instance, you are a supplier who's applying for, who's submitted their quotation, and you have someone working at SCM, for instance, who is a family member or who is your spouse, you need to make that declaration so that you can be assessed fairly. So that there could be no conflict of interest in the process. So the next bullet point states that the SCM process should also incorporate the process to be followed when inviting price quotations from foreign suppliers. Now, remember, colleagues, you might find that some goods are not manufactured locally. I know I see a lot of this around procurement for capital assets, like certain pipes or certain type of steel. You can't get it from the Republic. You have to maybe import it from China or from the US, which specializes in steel. So the SCM policy that is developed should also incorporate this element when dealing with written down price quotations. It should also stipulate the persons or committee responsible for evaluation of the price quotations. What do we mean by this, colleagues? Let's talk about these committees in detail now. So we first have the specification committees, and I said who drafts the specifications of what we are wanting to procure for. And then there's the evaluation committee. It's the people now who will be allocating points, looking at price quotations. If we are talking about functionality, I'm not sure if functionality is still relevant in the PPFA. I'm still going to read it. But if we are talking about functionality, it could be capability to execute a certain project. What type of things we are looking for? It could be the experience, the skill involved. So all of those things, colleagues, that's what the evaluation committee does. They evaluate. Basically, they give you points per everything that you have submitted to make your price quotation. And then what they do, the evaluation committee, they recommend to the adjudication committee. So the adjudication committee is more like the independent committee that needs to make a decision on which supplier to be selected. So if we do cover the PPFA at a later stage, it stipulates that the adjudication committee can or may not select the favorite supplier, but can select a different supplier due to certain reasons. Some of them, it could be achievement of the policy around, policy objective around giving the business to historically disadvantaged individuals. So the adjudication committee is more like a judge in this case. They adjudicate to say, okay, no, we're giving the business to this supplier, but it has to be a reasonable decision. You can't just say, no, we decided to give it to someone else, someone who was not even in the top three. Or someone who was not even recommended to the adjudication committee. So the policy should also prescribe a proper record keeping for audit and for record purposes. Colleagues, I said supply chain is highly regulated. So we need to have proper record keeping on it. There should be audit trail for anything. If we deviate, there should be audit trail for it. If we followed the process, there should be audit trail for it. Other people make their lives easier when dealing with written down price quotations. They look at the legislation, they look at the policy, and develop some sort of checklist to ensure that everything is followed to T. It also, the SCM policy should also give provisions for the preferential procurement regulations. We will touch on this at a later stage, colleagues. I just need to read the new updated legislation, because the last time I read it, there were some material changes that I saw from the one that I know from 2017. But the preferential procurement regulations, as I said, it's the one that brings in the equitable characteristic of SCM, which is making sure that business is given to historically disadvantaged people. Also stipulating provisions or regulations around subcontracting and all of that. So more controls on this. This is my last slide for today, colleagues. It states that goods should not be deliberately split into parts of lesser value. Ne? What does this mean? If we have to procure goods that are in total value are worth 1.5 million, we have to follow the competitive bidding process. We can't split those goods and say, no, we'll procure for this part, we'll procure for this part, we'll procure for this part, and then those values are lesser than the 1 million, and then we follow the written down price quotations. Maybe let's make a practical example of this. Let's say the South African Airways is purchasing an Airbus, a plane. As you might know that parts of the plane are separately how do I put this? They are separately priced, because some others remain longer and some others remain shorter. So you'd find that the seats have to be changed every 2 years. The wings have to be changed, or the engine has to be changed every 3 years. We can't say, okay, now we are just procuring the plane without the seats, simply because the plane is 1 million without the seats. And then the next thing that we procure are the seats. We are procuring them separately from the plane, just because maybe in accounting they are recognized differently. If we are purchasing a plane, we know what type of a plane we need. If it's for commercial purposes, we know that that plane has to have seats inside it. So the fact that the plane without the seats is 1 million and then the seats are maybe 300,000, the total price of that plane is 1.3 million. So we have to follow a competitive bidding process. We can't be saying, no, we're just procuring the plane, we will buy the seats later. This is one good. It's a plane. It's a full plane. It has to have seats. So that's what it means when it says we should not be deliberately splitting items into parts of lesser value simply because we are avoiding procuring goods with a certain process of or a certain procurement method of procurement. So the instruction note also allows the accounting officers to lower the thresholds if they want to, but they are not allowed to increase them. For instance, written down price quotations is up to 1 million. That's the maximum you can get. You can't come around and say in your SCM policy you've decided that written down price quotations are up to 1.3 million. No, that's the maximum you'd get, 1 million. But however, they are allowed to reduce that 1 million. They can say written down price quotations, we are only getting them for up to 800,000. Anything above 800,000, we're going through the competitive bidding process. So they are allowed to lower the thresholds, but you are not allowed to increase the thresholds. That will result in a non-compliance and possibly irregular expenditure. So, colleagues, that should be it for tonight on procurement and supply chain. We will deal with the competitive bidding process because we said the thresholds are 3. It's up to 2,000, which is petty cash, up to 1 million, which is written quotations, and then from anything above 1 million, that would be dealing with the competitive bidding process. So We will deal specifically with one episode of the competitive bidding process, and we will also touch on anything we might have missed on this quotations process and this petty cash purchasing process. So that's it for today, colleagues. I hope that what I've explained has made sense to you. And if there's any other examples that you want, as you usually do, as I said, I promised to do more TikTok videos to provide clarity where it's needed. So if there's any other areas that you wish for us to cover when it comes to procurement, establishing a unit, and up to the threshold of written down price quotations, please let me know. As I said, we will have a separate episode for competitive bidding and possibly deviations as well. So colleagues, for those again who are not following us on social media, please I ask you to just increase our numbers so that we can remain relevant as a page. On Facebook and on Instagram, we are Accounting Officer. That's the name of the page. On TikTok, we are Accounting Officer SA, and then on YouTube, we are the Accounting Officer. Colleagues, thank you so much. Thank you so much. Goodbye.